What if the world's greatest investor, a man who has navigated the Great Depression, the dot-com crash, the 2008 financial crisis, and a global pandemic, started quietly stockpiling cash at a pace never seen before in history? That's exactly what Warren Buffett did in 2024. And when the Oracle of Omaha speaks, or acts, Wall Street listens. In 2024, Buffett made some of the most consequential moves and candid statements about the American economy in years. From record cash hoards to warnings about the U.S. deficit, to his thoughts on taxes, AI, and the future of American business, every word was dissected by investors worldwide. So today, we're breaking it all down. Everything Warren Buffett said about the economy in 2024. Stay until the end. His warning about taxes alone could change how you invest. Let's go. Let's start with the number that sent shockwaves through financial media in 2024. By the end of 2024, Berkshire Hathaway was sitting on a record $325 billion in cash and equivalents, with over $288 billion of that parked in U.S. Treasury bills. Berkshire had never held more cash in its history, with the bulk of it sitting in U.S. Treasury bills, the textbook example of the so-called risk-free rate. Now, headlines screamed, "Buffett is predicting a crash." But here's the thing, he wasn't. And he said so himself. Buffett has never been afraid to speak his mind. If he were predicting a crash, he'd probably say it. So what was he saying? At the 2024 Berkshire Annual Shareholders Meeting in Omaha, Buffett explained the Apple sell-off. Berkshire had unloaded over 115 million Apple shares in a single quarter. And his reasoning wasn't about Apple's business deteriorating. It was about something far bigger, taxes. Buffett told reporters, "We don't mind paying taxes at Berkshire. And we are paying a 21% federal rate. But with the present fiscal policies, I think that something has to give, and I think that higher taxes are quite likely." Translation? Buffett was essentially locking in gains at today's lower tax rate before the government is forced to raise them, because of the ballooning U.S. deficit. That's not pessimism. That's chess. Now let's talk about the issue Buffett kept coming back to all year, the U.S. fiscal deficit. At the 2024 annual shareholder meeting, Buffett praised Federal Reserve Chair Jerome Powell, calling him a very wise man. But he added a crucial caveat: Powell doesn't control fiscal policy, and every now and then he sends out a disguised plea, because that's where the trouble will be, if we have it. In other words, the Fed can only do so much. The real danger is Congress's inability to rein in spending. Buffett has long been sounding this alarm. He knows that when a government prints money and runs massive deficits, one inevitable consequence is inflation, and inflation is a silent thief that destroys purchasing power. Buffett has noted that periods of runaway inflation can erode the value of currency, and even undermine the usefulness of bonds. Even in the face of a volatile economy, he points out that businesses can continue to earn profits, which is one reason he consistently prefers owning great companies over holding cash long-term. But here's the paradox: if businesses are better than cash, why was he sitting on $325 billion of it? Because, and this is key, Buffett could not find enough attractively priced businesses to buy. One of his favorite valuation indicators, commonly known as the Buffett indicator, the ratio of total stock market cap to U.S. GDP, stood at well over 200%, a level not seen since 1947, signaling that stocks were extraordinarily expensive. He wasn't predicting doom. He was simply waiting. Patiently. Like he always does. No conversation about the 2024 economy is complete without talking about artificial intelligence, the buzzword that dominated markets all year. So what did Buffett think? Characteristically humble. At the shareholders' meeting, Buffett said he doesn't know anything about AI, but that doesn't mean he denies its importance. He compared it to the atomic bomb being let out of the bottle. Once it's out, you're not getting it back in. He also thought carefully about which of his businesses would be most impacted. When asked what part of Berkshire is most at risk with AI, Buffett said, anything that's labor-intensive. He acknowledged there will be more leisure time, and that some people like having more problems to solve in that time. Now, that might sound vague. But think about what Berkshire owns: railroads, utilities, insurance, manufacturing, retail. Many of these are labor-intensive businesses. Buffett was signaling that he's watching the AI disruption closely, even if he's not buying Nvidia stock. He also referenced the legendary economist John Maynard Keynes, who in the 1930s predicted that output per capita would grow enormously over a century, and was mostly right. Buffett sees AI as another chapter in that long arc of human progress. Throughout 2024, all eyes were on the Federal Reserve as it navigated whether to cut interest rates, and when. Buffett, as usual, wasn't going to tell you to bet on rate cuts or fight them. But he did offer a clear-eyed view of the macro environment. He praised Jerome Powell at the 2024 shareholder meeting, calling him a very wise man for steering the economy through a tumultuous few years. And Berkshire was, in a sense, benefiting from the high-rate environment. With over $288 billion sitting in Treasury bills, Berkshire was earning substantial interest income, a direct benefit of the Federal Reserve's elevated interest rate policy. Meanwhile, Berkshire's insurance businesses continued to shine, with Geico returning to profitability after years of losses. This wasn't just a Berkshire story, it reflected broader trends in the economy: inflation driving up premiums, businesses adjusting, and the resilience of well-managed companies. Here's where Buffett surprised a lot of people in 2024, because amidst all the caution, all the cash hoarding, all the Apple selling, Buffett remained deeply, unshakably bullish on America. "A majority of any money I manage will always be in the United States," Buffett said. When asked why, he responded simply, "It's the best place. I was lucky to be born here." That's not a political statement. That's a 93-year-old man who has watched America survive wars, recessions, political chaos, and pandemics, and emerge stronger every single time. He once described the economy using a metaphor of a cathedral with a casino attached. The cathedral is where real business growth and value creation happen over decades. The casino is where people speculate on short-term price movements. And in 2024, Buffett was clearly telling us, there's too much action in the casino, and not enough value in the cathedral. So he was waiting, watching, building cash, letting others gamble while he planned his next move. This is the man who bought aggressively in 2008 when others were panicking. In 2009. In 2020. His patience is not weakness, it's strategy. One underreported thread from Buffett's 2024 commentary was his candid discussion of climate change, not as a political issue, but as an economic one. Buffett said that climate change increases risks, and that this actually makes their insurance business bigger over time, because the risk bearer can benefit. His insurance veteran Ajit Jain added that climate change, like inflation, can be an advantage for a well-run insurance company. But he also warned about the utility sector, noting that electric utilities face significant challenges as climate-related regulations and disasters reshape the industry. Returns in that space have been poor, and climate change is making the equation more difficult. This was Buffett at his most pragmatic, acknowledging climate change not because it's popular, but because it directly impacts his businesses and the broader economy. So let's bring it all together. What is Warren Buffett actually telling us about the economy in 2024? First, valuations are dangerously high. The Buffett indicator is flashing red. He's not finding enough value, so he's holding cash and waiting. Second, higher taxes are coming. The U.S. deficit is unsustainable, and anyone paying attention should plan accordingly. He already did, by locking in gains at 21%. Third, the Fed has done its job well, but fiscal policy is the real wildcard. Congress needs to get its house in order, and Buffett isn't holding his breath. Fourth, AI is real, important, and disruptive, but Buffett won't invest in what he doesn't understand. He'll invest in businesses that survive AI. And fifth, despite all of this, Buffett remains a long-term bull on America. Not blindly. Not recklessly. but with 93 years of evidence that this country finds a way. He's never bet against America's economy or its stocks over the long run, and he isn't starting now. And that, right there, is the most important lesson of all. Warren Buffett isn't trying to predict the next recession. He's not timing the market. He's building a fortress of cash, of patience, of conviction, so that when the cathedral reveals itself again amidst all the casino noise, he can walk right in. If you found this video valuable, smash that like button, subscribe for weekly deep dives on investing legends and market trends, and drop a comment below. What was your biggest takeaway from Buffett's 2024 commentary? See you in the next one.